this and we will start with the topic. Okay. So in yesterday's session, we have just done the basic overview of what do you mean by tax preparer. As per the IRS, the tax preparer is defined based on few criteria. What were the criteria? Just a simple compensation was there. Second thing is the person who is going to prepare the substantial part of the tax return. Third, we saw the definition of signing partner, and fourth, the non-signing partner. Okay, there were certain exceptions that just because of this four things which you're going to do, just entering the basic details, we did some examples, right? If your admin staff is just writing the organizer manually, like you cannot consider them as a tax return preparer. Okay, so there were 4-5 categories. After that, we saw which circular was which section of circular 230 was getting linked over here. That was 10.2. Okay, 10.2 straight away defines what is the tax preparer. Okay, now today we are going to start with the next topics, that is preparer tax identification number. I hope I don't need to explain this thing to everyone who is pursuing EA. You guys are already having your PTIN number, right? So all the paid preparers, how IRS will identify you as a paid preparer, you should be having a preparer's tax identification number, including any attorney, CPA, enrolled agent. Everyone should have this PTIN number, because when you are going to file a 1040 return or a S Corp return, C Corp return, any return, whether at a state level or a federal level, you can include the PTIN number. You have to include the PTIN number if you are a paid preparer. Okay, so it's just mentioning that this all professionals should have a preparer tax identification number before preparing any federal tax return. Okay, so a PTIN number is issued by the IRS to the paid tax preparer. It is a preparer identification number, and when applicable, must be placed in the paid preparer section of the tax return, the first page. Okay, if you guys have seen the 1040 return, the first page at the bottom, we have to put the signature, the paid preparer signature. Okay, so here the name of the paid preparer, if it's a firm, the name of the firm is there. The PTIN number is there on the right hand corner of the form, tax return. Okay, so this is about the PTIN number. Then what are the duties for handling the return? This is the most important topic. Based on this, in exam they will ask a lot of scenarios. They'll give the actual scenario, and then they will ask, is preparer has prepared the return like within his duties or not. Okay, so see, a tax return preparer must do 4 main things. What are those 4 main? Sign the return. Second, put a PTIN number on that return, and just have to provide a copy of return to the taxpayer, and 1 copy he should keep it with himself for the 3 years. Okay, so these 4 things are the main duties while preparing the tax return. Got it, guys? Before moving to the next, do you guys have any question in previous session? I think Somil and Rohit attended yesterday's session. Madhu, I think you will watch the recordings. Any questions, any issues in the previous session, guys?
No, ma'am. No.
Yes? Okay. All right. So, Ankit, we have just started. I have just explained one topic, that is PTIN number. I hope you know what is PTIN number. This is just that whoever is going to prepare the return. Now, please understand that every topic, how I have designed this material is every topic will be linked to the previous topic. Okay. So, this tax return preparer, when they prepare the return for all these 4 reasons, they will have to take a PTIN return. PTIN number, right? So this is the meaning of PTIN. Now, once you are preparer, once you receive a PTIN number, what are your duties? Now think diligently when you become EA and you start working on the clients, directly on the clients. What all will be your duties? First duty is you should sign the return. Okay, if you're a paid preparer, you should sign a return unless not required by instructions or code of law. Okay, there are some of the returns where you are just going to provide them some advice. Let's say you are providing advice that you should claim for refund or that. So that doesn't mean you're going to actually sign their return or you're going to actually work for them. Okay, so please make sure, just a minute. Yeah. So please make sure that you should sign the return being a paid preparer. Sign the return. While signing the return, you should use your PT number as well. Okay. Now next one is, yeah, that's why next step is PT number. There has to be a PT number. You should indicate the identifying number. All the paid tax return preparer, including attorneys, including CPA, including EA, everyone is required to mandatorily have a PT number. So if they have already have one, they must annually renew it, right? So those who have taken a PT number in previous year, you might have done a renewal of your PT number on the IRS site before preparing the federal tax return. That's why many job responsibilities you might have seen, they require active PTIN holder. What is active PTIN holder? When you renew your PTIN each year, that is your active PTIN number, which is still active in the IRS dictionary. Okay, not dictionary, sorry, directory. Now, third one is you should provide a copy of return to the taxpayer, whoever is your client. We provide one draft copy, then we finalize the return. Even after finalizing the return, one copy is provided to the client. That's why in all the software you will see, when you print the draft copy, when you print the whole return, there are two options. One is preparer copy and one is client copy. Okay, taxpayer's copy will be mentioned and preparer copy will be mentioned. In ProConnect, mainly, like I have worked in ProConnect, so I've seen that when you click on the print, there is two options: print complete return, print preparer's copy, print taxpayer's copy. Okay, so this is how you are going to remember all the points. You just think like you are working on a practical client and then remember the topics. And it should be provided no later than original return is presented for signature to the taxpayer. Okay, there has to be a signature of preparer and there has to be a signature of taxpayer. So when you are going to provide the copy of return to the taxpayer, so when our signature is taken, it is taken on two copies, right? So that one copy, when he signs, the preparer signs and he will keep that copy with himself, taxpayer. Okay, and the another copy we are going to retain in our records for 3 years. Got it? After the close of return period. What is return period, guys? For Jan to December, let's say Jan to December 2023, return period is April 15th, 2024. Return period is your filing date. From this date, you will retain the copy for next 3 years. Okay, or on the date on which the return or claim for refund was presented for signature to the taxpayer. Now let's say the taxpayer is opting for extension of this tax return. So instead of April 15, we are going to file it on 15th October, right? So instead of taking 3 years from this date, we will be taking the, please understand here, the wordings are important. The statutory limit in our summary book, we have a whole last 4-5 pages which is mentioning only and only statutory limits. Okay, so please understand that this 3 years will start either from the due date of the return or from the date on which we are presenting it to the client for signature, whichever is later. Okay, so this is clear, guys. Duties for handling the return. Now we are going to retain a complete, we means in our, whatever I'm taking here as an example, we means enrolled agent. Okay, after becoming EA, CPA or attorney, these are your duties. So we are going to retain a complete copy of return or claim for refund, or return a record of name, taxpayer ID number, or taxable year of taxpayer for whom was prepared. Okay, means let's say you are not able to retain a return copy or you are not able to retain a claim for refund. What you will do, you will maintain a register kind of thing or some Excel sheet, or somewhere in your records you will maintain that the name of the taxpayer. Let's say I prepared a return for Ankit. So Ankit's name I will mention. I'll mention his ID number. I'll mention this taxable year for which I'm preparing his return. Let's say I'm preparing his return since last 3-4 years. So every year his name will be mentioned in this record. Okay, and the taxpayer whom was prepared, taxable year of the taxpayer for whom the return was prepared, and the type of return or claim. Let's say I'm preparing 1040, 1065, or I'm just preparing a payroll report. Okay, 941 payroll return I'm just preparing for him. So every details will be mentioned in the records. You are also going to retain a record of name of individual preparer who has prepared that return. Let's say I have prepared it by myself and I have signed it and file it to the IRS. So I'll mention my name. Okay. So many times you will see maybe in big companies, this happens that you have to mention the initials of the preparer. So let's say I used to mention SP. Just a checklist is created. Okay. In just beside the checklist, if you have done those checklists, if you have checked those items, you are going to mark your initials along with the date. So that same way, whoever is going to prepare it, even from their office, okay, even from their office, if a preparer, reviewer, whoever is going to work on those return will be mentioned in this records. Okay, clear guys? So these are the 4 major duties which needs to be kept in mind after becoming EA, after getting a PTIN number. What is the next step when you prepare a return? Your 4 duties are sign the return, right? Second is just put a PTIN number on it. Third, once you sign it, you provide the copy to the client. 2 copies you will provide, and in 1 copy he will sign and give it us to back, and the second copy he will sign it and keep it with himself. Okay, and the copy which you are receiving back should be reading for the next 3 years. If in case we are not able to retain the whole tax return due to XYZ reason, at least we should have the records that this preparer, we have prepared the 1040 return along with the SSN number and the year for which the return was prepared. Clear guys? So duties for handling the return is very simple, easy to remember. Now let's see in circular 230, what are the duties mentioned by the IRS? Okay, so under circular 230, we are going to understand 1022, section 10.22a, 10.22b, 10.22c, and 10.29 and 10.33. Along with that, one more is 10.29b. Okay, 10.29 and 29b, 1033, CBA. I would recommend whatever sections I have quoted in book, only that much you should remember. There are so many sections on circular 230. No need to do each and everything in detail. Whatever we are going to put in the book and whatever we'll do in the class, remember at least those sections. Yes, Madhumanti.
Just one question, Siddhi. So, is there anything, means they will ask a direct question like in which section we have this, means do we really remember, means recall the section for every thing, or it's our normal purpose?
No, not everything. Whatever are important, only that topic I'll mention. See, section, if you have a good memory, then you can just remember all the sections of 230. If you don't have that much confidence that you can't remember all the sections, whatever I am including in the book, only those sections I'm including which are actually the important, which are having the higher weightage. Okay, if anyone might have seen the weightage of part 1, part 2, like part 3 also have a certain weightage. This chapter has the highest weightage. So whenever we'll see the sections, we will remember that. But see, the subsections, if you don't remember, that's fine. Now 10.2, you know that is a tax return preparer. And we are going to do on daily basis. So ideally, you will be able to memorize it. 10.2. The reason is like initially I was recommending everyone to not to remember it. But this is not a phase out limit. This is not going to change. This, even after becoming EA, you should be aware about your duties. That's why they asked in part 3 exam. One of the student, like he was not my student, he was my senior. He appeared for part 3 exam 3 times. He failed for all the 3 times, and he like came to me and asked for the suggestions. And when I asked like how the questions were asked, every time they asked the section numbers, they asked some logical questions, like we are going to be at the place of EA and how you're going to react in that scenario. That kind of practical scenarios were asked in part 3 exam. So that's why, and being in India, we are not having that much exposure working on the replying the notices, right? We just prepare or review the return. We do the final closing of the return. We don't reply on the notices. We have not yet reached to that level. So how we will tackle this? Just remember whole chapters. So trust me, whole topic, all the topics I'm going to tell you in a storytelling manner. Okay, so if you understand it in the case scenario manner, over there in exam also able to tackle those questions. Okay, so don't worry, wherever I'm quoting important sections, that only you have to remember. Whole section numbers no need to remember. So for duties, okay, what are the duties of handling the return? For handling the return, you are going to use 10.22 section. Okay, here just remember one thing. When you prepare a return, what are the things you should keep in mind? It should be uh, handled with diligent and accuracy. Diligent and accuracy means tax preparer must exercise due diligence in preparing accurate tax return and determining the eligibility for any amount. See, even if you enter a W2, okay, let's say the client has given you a W2 in a written format, like they have not the printed format. It's handwritten W2. Will you trust on that? Okay, the answer is no. You are going to check the accuracy even of the manual inputs given by the client. In our normal day-to-day life right now, when we are working on the tax return, we don't have that much time to take out the time and check each and every accuracy. Okay, this accuracy and diligency which they are talking about, just the truthfulness of the information given by the client. Now, because what will happen, the client will say, okay, I have 3 children, so you should be aware about his family tree, about the family background. We are just a back end of that tax return preparation side. The one who is going to coordinate with the client face to face, he is going to be aware about all these things. So that's why this all duties are of home tax return preparer. So our CPA knows that he has 3 child. Okay, what if he has bluffed the third child? Okay, just he has given some random information, because part 1 you have done. If a person wants to become a qualifying child, there are certain conditions to be fulfilled. Okay, so how you will be able to know that? Checking the school records, checking the health medical information. Okay, there was this one question in my attempt, I remember. So if the client is, what will be the important documents to check whether the person is a qualifying child or not? How you will identify? Medical records means birth certificate is there. Okay, the school records were there. So that 2-3 options were given, right? So see, in part 3, whatever MCQs, even if I give you a lot of MCQs, you will not see any MCQ copy pasted in the exam. It's totally on your logic and understanding. So first one is diligence and accuracy. When you receive a data from the client, information from the client, you should check the accuracy of that data, truthfulness of that data. That is what the first point is saying. Okay, second thing is reasonable reliance on others. Now let's say you have received information which has some third party information. Let's say a C corp or S corp is there, where they have just mentioned in the balance sheet a cash balance of a bank balance of $10,000. Now you should need a reasonable reliance that yes, this person might be having a bank balance of $10,000. Okay, even though let's say they don't have any profit or anything, if they have mentioned a huge amount of asset, huge amount of liability, or a huge amount of information, so what you are going to do is check it through the source documents. Okay, so see what is mentioned here. Preparer may rely in good faith. Okay, he can rely in good faith without verification upon information furnished by the client. He can rely on that bank information provided the reliance is reasonable. Now you can do easily do the scrutiny, right? Scrutiny of books of accounts. Ledger scrutiny you're going to do, and you see that already the client is in huge losses. He's having a huge liabilities. How he's purchasing the higher amount of asset? Okay, he mentioned that we have in books he has already recorded the huge purchase of asset or a machinery or a vehicle. So it should be your reliability. You should think from your common sense, like doing a ledger scrutiny, applying your analytical skill, and understand that please provide a proof for this particular expense or this particular asset. Okay, this is called as a reasonableness or reliance on the information provided. However, preparer must make a reasonable inquiries. Okay, if needed, he will make inquiries. If the information appears to be incorrect, inconsistent, or incomplete, he feel that, then he can ask for the source document. Anyways, while preparing the corporate returns, we have a specified checklist, right? Wherever the source documents are there, first step is to provide all the financials. Second is provide all the payroll reports. Third is provide all the bank statements, right? And if there are any credit cards or loans, then provide those statements as well. If the fixed asset are maintained in other software, we ask for the fixed asset reports. We will compare it with the previous year return. We will check that whether there are any additions or not. If yes, we will ask for the proof. Okay, so this is the second thing. This is just checking the truthfulness. Second, whatever unreasonable thing you find, you will ask, inquire for those things, right? Third one is, what is your duty? The third duty is you should document and keep on record all the information which you feel that can increase or decrease the tax liability. Okay, so see, preparer must maintain the records and maintain that preparer must maintain records and documentations that provide support for any position taken on the tax return. Now today only we are going to understand, in case of preparer penalty, there are 2-3 different types of positions. Substantial position is also there, substantial authority, and reasonable basis, and a tax shelter. These 3 types of position we will see in detail, that based on that you will be liable for certain penalties. Being a preparer, so you don't think just clearing your EA exams and taking the license and preparing the return, your duty is done. Your duty is actually very huge. Okay, so diligence, reasonable accuracy you will check. Third is documentation and records needs to be maintained. One example is work papers. Okay, on what basis have you prepared the return? On what basis have you taken the payroll expense? Right, you will have a payroll reconciliation report. On what basis have you considered the inventory? So you will have a sales tax reconciliation report plus inventory valuation report or something. So all the record keeping should be done on your side also, being a preparer. Okay, see, this includes retaining a copy of documents provided by client and any working papers prepared in connection with the tax return. So these 3 are done. See, first you check the accuracy. When the client came to your office, you check the accuracy of the data which he is providing. Second, you started preparing the return. At that time, you did the ledger scrutiny of the balance sheet, P&L, and all the information. Third, you find that like we need to prepare a work paper. So you prepare the work paper based on the information given by the client. That work paper needs to be kept in your record for at least 3 years. Okay, years are not mentioned, but at least 3 years you have to maintain the documents. Now, fourth is, after the return is prepared, everything is done, you should maintain the confidentiality. Let's say you are a EA and your family members, all the family members who are in US are going to ask you to prepare the return. Okay, so you should not transfer the information even if you are a family member, that okay, Mr. X uncle has purchased a new property or he's planning to purchase. So that should be a confidentiality. He has paid this much taxes. You should not share any information. Even if the taxpayer and spouse are coming and they are asking to file a separate return, you cannot share the confidential informations to both of them. Okay, so this is what your major role will be. Okay, so preparer must adhere to strict confidentiality rule regarding the client information. They may only use such information for the purpose authorized by the client or required by the law. They cannot use the information for their own advantage. Okay, clear guys? Next one is competence. What do you mean by competence? You should be competent enough to prepare the return. Okay, do you remember yesterday I mentioned one example? There was 4 partners, they came to me and they said that we want to start a tax consulting firm. But I said, okay, that's fine, you can easily prepare it, you easily be formed. But the thing is, how you will take the return, prepare the return, maintain the confidentiality, how you will advise the clients. Okay, so there the major concern will come. Competence means what? Let's say if a person has uh, contributed huge amount into the IRA. Okay, huge amount into the IRA. In that case, what will happen? You will require to, after preparing the return, you will have to advise the client that, see, before the deadline you can easily withdraw the money, else you will be liable for penalty. So that competence should be there, right? That is the reason why you guys are studying EA, right? You are going to study CPA, or you're going to take any taxation knowledge, because at least not only the data entry, you should know the back end of that topic, why this thing needs to be entered on which screen, and what will be the impact, and how we are going to tackle the client, how we can save the client from the penalties. Because see, taxation is a very wide subject. Even if you make a single small mistake, once the penalties start applying on your return, and if you do not pay it, you do not respond to it, it will keep on increasing day by day. Per day penalties are there. You will see that how much penalties preparer will also have to pay, and if there is a mistake from taxpayer side, taxpayer will also have to pay. Okay, so confidentiality is maintained, then you should be competent enough to prepare the return. So preparer must possess the necessary competence means necessary knowledge to prepare the accurate tax return. This includes maintaining the knowledge of relevant tax law and regulations and staying informed about the changes in the tax law that may affect the return. One example I'll say is, even after becoming EA, you are required to maintain the credits, right? So this is that only. You should maintain your knowledge up to date. You should be competent enough. That's why. And when you renew your PTIN number, what happens? Okay, not while renewing the PT. When you renew your EA license, okay, that renewal procedure is also there in our part 3. Okay, one of the section is there that mentions how to maintain your EA certification. So in that, within 3 years, you have to achieve 72 CE credits. Okay, and per year, at least per year, you should have 24 credits, 24 credits, 24 credits, like this. Okay, so it's like a limitations on taking the education also. So even after becoming EA, IRS will ask you to take certain knowledge from the CE providers. Who are CE providers? They have updated knowledge, they provide the information, they provide some online trainings. While taking those training, you have to just mention them your PTIN number. Okay, clear guys? So always your PTIN number will accumulate the credits wherever you're going to watch the lectures. Next one is prohibition on negotiation of check. So this is an important one. Based on this, there are few questions which were asked in the recent exam. And one more question was, okay, in preparer penalty it will be there. See, prohibition on negotiation of check means what? Let's say, Rohit, you are preparing written for your client, right? Now the client is a Amish client. Amish client means what? They don't have a net banking. Okay, Amish client means farmers. Okay, mostly they are working in the agriculture industry, right? So they don't have, even they don't use car or any electronics or anything. Still there are certain states in US where you will see this kind of people who usually are still exist. Okay, I can say. So when they want to file the return, they also earn income, right? They earn farming income. So that Schedule F is going to be filed on the 1040. So when they come to file the return, they will provide a lot of documents and everything in a manual format. So while receiving this refund, they don't have the bank details. They don't have the net banking, and they usually prefer taking the check. Okay, taking the refund through check. So what you have done, Rohit, is instead of taking the check in your client's name, you took a check in your name, deposit the check in your account, and provided him the cash. Okay, so that thing is not allowed. This process is called as negotiation of the check. Okay, so see, whenever there is such kind of transaction, it is not allowed. That farmer client will himself have to receive the check in is his own name. You cannot ask the IRS to issue the check in your name being a preparer. Okay, if it is done, it's a huge breach of the duty. And once there is a breach of this kind of duties, any of these duties, okay, please remember, now one by one, each and every penalties will be based on and every penalties will be based on this just a minute. Okay, so this all types of duties you should remember, because we will link each and every penalties to these duties. Let's say you break the diligence and accuracy, you break the reliance. Okay, you forgot to look at the document very well, you forgot to keep the record keeping for 3 years. Okay, and you break the confidentiality, or if you are not competent enough and you made some mistake, okay, the preparer will might sue you for some penalties. Okay, just a minute, guys. Okay, so these are the main duties you will have to remember, because each and every penalties, as I mentioned, will be linked to all these penalties. Okay, so let's move to the next one. First, before moving to the preparer penalty, I want to explain a very like basic thing. It will be hard to understand. The terminology actually is used very much actively in your part 3 topic. Okay, so let me share another thing from summary book. I'm going to explain one thing first, and then I'll move to the regular part 3. Yes. So whatever we are studying, the whole thing you will see here in a very normal chart format. Okay, now see. So preparer penalty will be applicable if the preparer has not taken the reasonable position on the tax return. So here, reasonable position is defined based on three categories. Okay, please understand. And if you think that you're not able to catch up the things, please let me know. I'll go slow. See, first one is, what is unreasonable position? Okay, position is unreasonable. Please see here, this is negative, negative. It is unreasonable unless it meets one of the three condition. Means, can I say if it meets the three condition, one of the three condition, it is called as a reasonable position. Got it? Again, I'm repeating myself. When you are going to take a position in the tax return which is reasonable. So, return preparer are responsible for taking a reasonable position. So, if you are going to take a position which doesn't follow any of these three, then you will be called as have been taken an unreasonable position on your tax return. Unreasonable position means you have prepared the tax return with a lot of mistakes, lot of irregularities without looking at the IRS laws and all those things, right? So see, what are the three conditions? First position is you have substantial authority. Okay, if you have a substantial authority, disclosure is not an issue. Okay, even if you do not disclose but you have a substantial authority on whatever things you have reported on the tax return, then disclosure is not required in the tax return. Okay, there is a one tab in the tax return where you can post your disclosure statements. You can attach a disclosure statement. Okay, so see, substantial authority means what? More than 40% of chance, but up to 50% of chance of succeeding in the court. Okay, so let's say whatever position you have taken, let's say you have taken a child tax credit. Okay, now you know that this credit I have taken very well. Okay, let me take a recent example, yesterday's example only. It is there is one client, and I'll take that example and explain you all the three. He is a performer or an artist. Okay, performer or artist. Okay, he receives royalty, right? So can anyone tell me, is this royalty called as a passive unearned income, or it should be it is active income, right? But normal layman language, what they will do, looking at the royalty straight away, you are going to enter it in Schedule E. Okay, preparer made the same mistake. So what I did some research is, when a performer is going to perform something and from that he is going to earn income, from that he is going to earn a royalty income, it is considered as a active income. Now you took this royalty income on Schedule C instead of Schedule E. You are 99% confident, looking at all the publications, looking at all the memorandums and all, you decided to show it on Schedule C. So how much is the probability of this how much is the chance of this case to be successful? Can I say 50% or more than 50%? So if you are having the probability of this successful just a minute. Okay, if you're having the probability that this case will become successful, the chances are more than 40%, up to 50%. Less than 50 but more than 40, right? Then the chance of succeeding in the court, then disclosure is not required. Means, can I say even minimum 40% of chance of succeeding is there, no need to disclose it, then it is known as this 40% chance. Minimum means 40 plus 40 to up to 50. So this is called a substantial authority. Being a preparer, you have taken a substantial authority on the return, and yes, it will be considered as a reasonable position. Okay, clear guys? Now second condition is, I'll take the last one first. Last one, what it is saying is, if it's a reportable transaction or it's a tax shelter or a listed transaction, it is known as the terminology which you will see in all the materials. Okay, whether it's claim or surgeon, eyelid, any XYZ material, they have just copy pasted the publication language. Okay, the whole publication language has been copy pasted. You will see this word everywhere, more likely than not. So what is that meaning? What is the meaning of that? More likely than not means more than 50% chance of succeeding in the court. More likely than not succeeding. Complete the sentence. It's like more likely than not succeeding. More likely we are going to succeed than not succeeding. Got it? I hope you are understanding the language, everyone. Ankit, Rohit, Somil, got
Yes.
it? Yeah.
Yes, ma'am.
That performer was an artist. That's why we consider royalty as an active income, right?
Yes, yes. Because he,
Mm.
what his main business is performing. He's a musician. Okay, so he is a singer. Then his main active business is that only. He's not doing it for hobby. He is doing it for earning. Okay, so that's why we'll include it in the schedule C. Let's take my example. I'm going to receive the royalties on the book. For example, I'm not receiving actually right now, but in case if some university is going to publish it in their course structure, or if some institutes are going to purchase and publish it, and I'm just going to receive the royalty for that income, okay, for that book, then that is my earning source. So I will include it in my schedule C. That is not my passive source. The royalties from oil well and gas. Okay, oil wells, oil and gas wells. Okay, you might have seen those kind of clients who has the oil wells. So they are not actively involved in generating the oil, right? Just the government is going to pay them royalties to use that oil and take out the oil for public usage. So that is your passive. That is one example. So when you feel that more than 50% of chances are there of succeeding into this kind of case, but what kind of case? If it's a reportable transaction, if it's a tax shelter, or if it's a listed transaction. Tax shelter means you have done some tax planning strategy where there is a tax savings. Okay, so you have, let's say, let me remember the example. Let's say there is one. Okay, I don't have the tax planning example, but I'll come up with many examples in upcoming days. No worries. So let's say if you have done some strategy due to which you have saved the tax. Okay, a huge amount of tax. If you guys have an example, you can also share. Not an issue. So those kind of transaction, how much confident you are, how much chances of succeeding, those reportable transaction is there. So let's say if you file the return, and how much chances are there that this return will not have any notices on it. So if you think that, see, here we know, right? It's 100% foolproof. Along with the publications and all, we have researched it and converted it to schedule C. So here there are more than 50% chance of succeeding in court. That is most stringent one is the third one. Okay, that is reportable transaction. Okay, you just need to report it. You don't have to see here. First one we saw that no disclosure is required, but here if it's a tax shelter or a listed transaction, and you think that you have saved some taxes, or you have invested in tax shelter strategies, and there are more than 50% of chance that this is correct strategy, then you just need to report it. Okay, there will be MCQ which will be based on these three things. So you need to remember, wherever there is a substantial authority, there will be a 40% chance, or more than up to 50% chance that it will get succeeded. So you just need to disclose it to the IRS. And the third one is, if there is a tax planning strategy, means it should be reported, even though there is more than 50% chance of succeeding. So it should be reported. Now the second one, mostly the questions will be based on this. What it is saying is, if there is a reasonable basis, okay, you have a reasonable basis, then the disclosure will be required. Now, yeah, I remember one example. There was one client, they received a damage award from their employer. Okay, she has done some court case on the employer, and after few months she is going to receive the damage award. So whatever are the attorney costs, see, as per the all the publications and everything, it is mentioned that whatever attorney cost she has incurred, that much only needs to be included in the income in the form of awards for damages. Okay, so there is a reasonable basis, but you are not sure about whether it needs to be properly included or excluded. Okay, so one is reasonable basis where more than 20% of your tax position is upheld, so disclosure is required. More than 20, upheld means you might be incorrect for more than 20%. Now, so you will think that how we will know the probability and all. So it's up to you whether you have taken any of these three positions on the return or not. You have to think wisely. That is the reason why I usually recommend all the preparers to not only do the data entry, go through the whole topic in detail from the IRS website. Look at the back end of that material. Okay, only IRS website is not enough. Just go through the publications, memorandums. We will see that what are memorandums, what are publications, what are developed fast, and what are launched on the IRS side. There is a whole difference between that. Okay, and arguable means there are less than 50% of chances that your position will be withheld. If there are more than 20% chance, then the disclosure is required. The question will be asked based on whether the disclosure is required or disclosure is not required. So if you are having a substantial authority, then the disclosure is required. If you are going to report the transactions, it should be reported, not only disclosure, it should be reported on the income tax return as an income or as an expense. Let's say it should be first included as an income and then excluded as an expense. Okay, this is what it is called as a reportable transaction. And the second one is reasonable basis. If you think your position is going to be upheld, okay, more than 20% of time, then you should report it, disclose it. So whether disclosure is required here, first, no disclosure. Disclosure is required only reasonable basis when more than 20% chances are there for upheld. If less than 20% chances are, no need to disclose it. Okay, clear guys? Tax shelter is partnership, other entity, plan or arrangement with a significant purpose to avoid or evade the federal income. So that is what I mentioned is tax planning. Yes, that's what I mentioned, Somil. We cannot decide the percentage that this case will fit in the scenario. We cannot mention the percentage. That's when exam, they will ask straight away. They will use the wordings which are marked in blue mark. See, substantial authority word will be used, right? Reasonable basis, arguable basis, reasonable basis word will be used. More likely than not, word will be used. The position will be withheld. The chances are more likely than not. Just that much they will give and leave it the answer. So you should be aware about which category it is falling, first, second, or third. If any of the three category you are fulfilling, you will be called as having a reasonable position. If you are not fulfilling the substantial authority, you are not having a reasonable basis, also you are not having a more than 50% chance of this tax evasion to be correct, then you will be called as having a unreasonable. As soon as you see that you are having an unreasonable position, you will need to pay the penalties. And disclosure statement, wherever it is there, it should be filed on form 8275. And regulation disclosure statement is 8275R. This is used to disclose items, positions taken contrary to the regulations. Let's say our regulation says that $10,000 is only allowed as a reportable transaction if you're going to make a cash transaction. Now, if you're going to make a disclosure, even if you receive a cash of, if you have not made a disclosure and if you feel confident that no disclosure is required, you receive a cash of $15,000, then that is against the regulations. So go for 8275R. And here, used to disclose item or positions that are not otherwise adequately disclosed on the tax return. Disclose on the tax return means I know my income is $10,000, but this should have the whole 10,000 should have included on return, but due to XYZ reason, I'm just including $8,000. So you have to disclose why you're not not mentioning that $2,000 on the tax return. So that is a correct disclosure. This is for regulations, in contrary to the regulations if you're disclosing, that is 8275R. Okay, clear guys? So when once you file this, now you will see in the we'll see the penalty chart tomorrow maybe properly. So there you will see, as soon as you file this, you will avoid the portion of accuracy related penalty. Okay, due to disregard of rules or substantial understatement of income tax for non-tax shelter items, if return position has a reasonable basis. Okay, and if you're going to provide a reasonable basis, or if it's a non-tax shelter item, it's not tax planning strategy, and if you're going to disregard the rules, or you are going to have a substantial understatement in the income tax. Okay, in the return you are going to understate the income, or you're going to take extra deduction, you're going to take extra credits, then you are reducing your tax liability. So this due to this, there can be a penalty, that is accuracy related penalty. This can be avoided straight away by filing a disclosure statement attaching with the return that this is the reason. Like, tell to the IRS at the initial stage only the reason. Instead of they find an I'll tell one example. Yeah, I remember one example. Let's say W2 is filed by the employer. In that W2, 100,000 is mentioned. On 31st Jan, W2 is issued to the employee. W2 is given to the IRS. Now, IRS has the data that Mr. X is having the income of 100,000. Due to some errors, due to some mistake, they have to file a corrected copy of W2. Now, let's say they file the corrected copy of W2 in the month of March. But before filing in the month of March, the corrected copy, they file the return. And while filing the return, they mention only 80,000 as a W2. So instead of the system catching this mistake, you are going to straight away disclose that I know the corrected W2 is not yet filed. You will attach the acknowledgement that corrected W2 will be given by the client in the month of March, or whatever is the reason. So just disclose it over here why you are showing 80,000 instead of 100,000. Instead of they straight away charge a accuracy related penalty either to the preparer, or they will charge a substantial underreporting. Now clear everyone this topic? This is the major part from where 2 to 3 questions will be there in the exam. Okay. Yes, any questions? All right. So what I'm going to do is this part 3 material, I'm going to upload it on our Google Classroom. In part 2 also, I think I have promised to do that. So before coming to the tomorrow's session, make sure to go through the theory portion which I'm uploading. Okay, preparer penalty, the meaning of this all will be in the theory format, but now you'll be able to understand it, what they are trying to say. Okay, so then avoidance versus evasion and fraud. Yeah, tomorrow we are going to understand the indication of fraud. On indication of fraud, there were so many questions in not recent, not current exam, like current window, I have not seen anyone appeared for part 3. Previous window, there were so many questions on the indication of fraud topic. So we'll do that in detail, and after completing this, we'll see which publication applies to, which section will apply to the preparer penalty, along with the whole penalty chart from the summary book. We'll do it. Okay. Any question, guys, till now?
Ma'am, please add me in Google Classroom.
Sorry, for part 3 slots.
Yeah, for part 3. Yes.
Like, let's see, everyone is expecting to get it open in August, maybe end of July or till August. Let's wait for few days, and even in case if it opens a little bit delayed, then it's good for you. Still now prepare very well, and as soon as the slots are open, just book the exam dates. This is a theory, you will need a lot of revision even after completing the lectures. Part 1, part 2 was easy, right? Because we have already understood the topic practically also, a little bit of examples, but here again and again you need to revise the topics, right?
Okay,
so
we are not starting classes for now. I mean,
for part 3?
Yes, for part 3, ma'am.
Madam, what he is saying is what he wants to add in a classroom.
Ma'am, Ankit.
No, I'm adding it. I was just waiting to complete the demo and then I'm going to add it. But anyways, I'll add it today anyhow. Part 2, I think I added, but I've not given the access to everyone. It is uploaded on the YouTube also. So first 3 lecture gets uploaded on YouTube. And after that, once all enrollment comes, I add it in the Google Classroom on the 3rd day. The same trend we did in part 1. Same thing is there for part 2 and part 3. But maybe tomorrow early morning, I'll add all the recordings and the notes for part 2 and part 3 in the Google Classroom. I think Somil is already there, Rohit, Ankit, okay, you 3 are already there in the group. You guys can just share me your email ID where I need to provide the access. Okay, so at least this 3 lectures plus the notes for the 3 lectures will be uploaded on Google Classroom. On daily basis, it will be uploaded. See, Ankit, these lectures are useful till February 2025. So even if you are going to watch the recordings in future, these recordings will also be useful. And this is this is the batch which I'm taking it in very much detail, so that many people prefer only recordings. So this is kind of first and last live batch which I'm going to take for this window. If there are so many people who want the live batch, then only I'm going to open the new live batch for part 3 later on. Got it?
Okay.
All right. So that's it for the day. Tomorrow we'll target the remaining topics of this study unit 1. And we'll see some MCQs if we can solve live in the class. I can show you some in summary book, last page 80 questions are added. Those are exam based questions, like those were asked in the exams in previous window, not in current window, because no one has yet appeared for part 3. We are waiting for anyone to appear and we can collect the questions. Okay.
Madam.
All right. So
Bye, ma'am.
yes, thank you guys. Bye. Have a good evening.